Recording in
we
progress.
got that move up to 130.80. It held pretty well, and off another near on 300 pips after that, or over 300 pips after that. So it's showing that yes, the dips are being bought, but the rallies seem to get hit harder than the dips get bought, if you know what I mean. So it's just
I agree.
Aligning yourself which way the wind's blowing at any particular time.
So it sounds like Dale got here. Dale.
Yes, sir.
How did you make it in? How did you make it in, buddy? I'm so happy.
Yeah, I don't know.
You don't know.
I just kept trying things. Maybe
you just kept clicking things until you got in. Awesome.
Yeah.
Glad you're here, mate. Good morning.
Good.
Yeah,
good
glad you
morning.
made it.
Yeah.
Nice Monday, hectic
start.
Nice start on a Monday. And I try to explain to like everybody else, and I was like, it just turned 5 o'clock in the morning where you live and where I live, and it's like that. This is the last thing you need to deal with is like technology issues.
Yeah. Anyway.
Well, it's good to
start
have
at the bottom. The only way's up, eh, Dale?
Yeah. So let's all have a great week. I believe we have an excellent week lined up with interviews, starting with Carley Garner. Carley will be here in a little while, so I'm glad I'm in.
I'm going to stop sharing. Reaction to Mark. Take over.
Yeah, here I'll well, Dale, you want to take over, or I'm gonna actually, what I need to do, because this is what I was gonna do initially. I was gonna actually go grab a cup of coffee, which will take me literally a minute and a half. If you want to just go ahead and
share my screen,
brief everybody what's going on. All right,
sure, okay,
you can take it.
Go enjoy your.
I'll be back in just a second.
Okay. All right, so Ryan's here with me.
Yeah.
And let me just.
I bet you need a shot in your coffee this morning, don't you, Dale?
I'm here as well.
Okay, so
there we go.
What has really changed? The euro.
Nothing.
Still think it has to flush because of this. One more time. Do you guys think we got one more flush? Think we're going to parity?
I was saying it's a little work. We were talking about exactly the euro dollar this morning in the room with a couple of people, and I'm worried about the euro, that the change of tone in ECB members doesn't have more than 20 or 30 pips.
That's it, huh?
Impact. We really, in my opinion, we really need to start above 104.90, 105 and a quarter. To even get a chance to get into a more balanced view of the euro dollar. As long as we are below that 105, it's looking like any rally is sold into.
Yeah, it's 3.5, almost 4.5. Will give you 240, which would take out the low from years ago. And I think the DSI was 5 on euro on Friday. So.
It was pretty ridiculously
5
low. Yeah, was it 5?
Yeah.
Wow.
Yeah.
I mean that is very extreme.
So 103.40 would clear out the 17 low. I think that was the Macron election that got it going.
Actually, on Friday, Dale, Friday it was not. Friday it was 12. I think it was Thursday that it was 5.
Okay.
It was something like that. But yeah, we kind of eased up after Friday, but still, they're very extreme numbers.
And good call on gold taking out 1,800. You said that you thought they'd shake them out. And now let's see what will turn. I mean, silver, the gold silver ratio is off quite a bit from its highs on Thursday. And silver for weeks and weeks and weeks, silver was underperforming gold. That's why I took out those stops, but there seems to be a little shift underway here on the gold silver ratio. Maybe it topped. So I'm hanging my head on that for a turn in silver, that eventually maybe it's going to turn the gold around. It was more of a silver signal for a buy than a gold signal for a buy.
Well, that keeps Dale happy.
So we'll see what happens there.
Wait, we have to pay a little attention because those Chinese data coming out overnight were not really good, and silver being an industrial asset or class, people might be a little bit reluctant to jump into silver. But personally, I also bought a little bit end of last week and then sold it out again this morning. But I wouldn't mind starting to if we get another like flush out, starting to load up more.
Yeah, because there's a couple of moving averages that come in here. One just above the 61.8. Some people think it could get down under 19. A lot of people waiting for 20. It could get there. The most bullish thing it could do is have people wait and never get there. So, you know, we'll see. But I know a lot of people want to buy it down here.
Or flush them out around 19, 18.
If they do, flush them out.
Yeah.
I would say getting back above these lows that held for a few months back over 21.43 would be your first sign.
Yeah.
Because everyone was stopped out under these two lows here. But gold, you know, really it still has a stronger chart. But I even saw a guy that I know talking about like 1250 gold.
Yeah, well.
So we'll see.
1250 gold, could you imagine?
1250, yeah.
I mean, that's you know, I have to say, and just I want to stop here and talk a little bit about gold. I have like you, Dale, I've interviewed a lot of people over the last just give me the like the last 12 months. I have not met $1 or one gold bear.
Yeah.
I mean, maybe there's been one sprinkled in there, not one that I can remember, one that stands out. I mean, you know, if I ask anybody about gold, everybody's universally bullish gold. So, I mean, you know, I think 1200 would be a stretch, but it hasn't surprised me that we've seen like this constant grind lower. You know, I've looked for bottoms, but you know, maybe this was it, the shakeout below 1800.
If it repeats the silver act, then it takes out these lows here.
Yeah.
Before it turns good, and that's deep enough if you're long right now. That's a shade under 1600.
Yeah. No,
and if that doesn't hold, then anyway, if it gets down there, the bears are right.
So I want to ask you guys this. What are your thoughts here? And this goes to Ryan, you know, Kman, you, Dale. I'd love to hear your thoughts too. What's the risk on play? I mean, you know, I think that the market might be a little too bearish down at these levels. You know, everybody's expecting this big move lower in risk. What would be your trade on a risk on move? Like if you saw a risk on, and let's just say it was a 2-week, you know, we're trading at 4,000 right now in the S&P. Let's say it goes 4,000 to 4,250. You know, everybody's like, oh my God, I can't believe we're rallying, you know, because, you know, whatever reason. What is your trade to be, you know, long?
I think you've got to move with the data. You know, we got things like US retail sales coming this week. And if the market is in this global growth thing, you've got to look at that for your triggers.
Ryan, forget the data, forget everything. What is your trade of choice? Argument's sake, the market rallies. What's your trade of choice? What would you be long?
This
probably Aussie dollar.
You'd be long. Dale would be long semis. Ryan would be long Aussie dollar. Ryan, or I mean, Kman, what would you be long?
Long emerging market, short yen.
Long emerging market, short yen. Is that what did you say?
Yeah, that's like on a dollar turn.
Yeah, I would be long pesos. I'll be long pesos. That would be my trade.
Part of the emerging market. Huh?
Yes, it is. Yes. So I agree with you. I'd be along the dollar max. You know, I actually just I picked up a little RAND this morning. Just at these here. Let me take the charts real quick. Yeah.
But anyway, look at this reversal week in semis while the rest of the market was down, even though it recovered.
Yeah, that's a big deal.
And that was a great trade you made from down there, Blake. And you'll probably get your 40.80 this week.
Down on what? On the
S&P, you were long looking.
Oh yeah. I actually I sold out of it on Friday. You know, so I picked up a little S&P. I actually picked up the S&P I think I was long NASDAQ now that I'm thinking about it. But anyway, I was long S&P last week. And look, this is if this develops nicely, it'll look something like this. And I know everybody's thinking S&P the other direction, but I'm not in the camp that happens. I'm in the camp that the stocks recover a little bit. I would sell any rally, and look to sell in any type of rally if I could. But I was just going to say that the dollar Mexican peso, this is, my trade of choice. And I think this is what Kman's saying too. I think the dollar Mexican peso is at risk of a break of a major sell-off here. And I was also going to, talk about the Rand right up against pretty key resistance. You can see these highs from November, of 2021. And I mean, the end of last year, we're just basically challenging those levels right now. And so, yeah, I sold a little bit here because the risk is very manageable, and again, I'm in the camp that stocks bounce a little bit here. Doesn't mean that we're going to all-time highs. I don't really think that, but I think that we could see a little bit of, risk recovery as of right now. How many of you guys are going to get long some Ethereum or Bitcoin? Anybody?
It's going well. It was up big yesterday. Gave it all back today.
Yeah, I don't know. Ryan came.
Nope.
No.
You don't.
I have a bid in Bitcoin at $30, not 30K, $30.
Okay, so you are a non-believer of Bitcoin. Got it.
I'm a believer, but not here.
And not at these levels. I got it. I do think that that Bitcoin is going to recover a little bit, but I would be selling rallies here. But Ryan, do you trade crypto at all?
No, don't tell Kman I'll be bid at $31.
I'm sorry.
Don't tell Kman I'll be bid at $31.
I was going to say you got a bid just above his bid. All right, I was just wondering. I mean, after actually Luna got delisted last week, but I still think that they can recover here. I mean, I would sell rallies to 35,000. That's what I said in the week ahead video. I still am in agreement with that. And I'll sell some Ethereum on a rally. But I was talking to one of our traders in our chat room today over the weekend. His name's Jack. And for those of you that don't, maybe you've never heard the story. Jack used to come to my office early in the morning, like at 4:00 in the morning, 5:00 in the morning. He would sit here for the F.A.C.E webinar a few years ago when he was like 17. He just turned 21 last week. And I know his family, his dad was one of my son's coaches. And he wanted to learn how to trade currencies years ago when he was in high school. So he's used to sit in my office as I would trade. I was doing a lot of proprietary trading at the time, and he's actually become pretty skilled crypto trader himself. But we were talking about like a lot of the future of crypto, and I'm not a huge believer in buying a lot of different cryptos, but I'll tell you, I think and something that I've been a believer in is the blockchain technology, because I do think it's going to, kind of reshape the way that, the markets look at money and how we track, money and transactions. So anyway, I'm going to be a buyer of these cryptos a little lower. I'm still looking for Bitcoin to trade closer to 20,000 and Ethereum probably closer to 1,500, but I am looking for dips to be a buyer there. So I did have a chance to go out and have a cup of coffee with Jack this week, which was really, really nice. And we posted a picture in the chat room. So, cause a lot of people know him from the chat room. So anyway, and speaking of which, if you guys haven't had a chance to check out our chat room, this is kind of what it looks like, in the ForexAnalytix community. Not only do you get the app, but and all the analysis, but you can see the chat room here. Let me see if I can show you, a picture of Jack and I I posted on, oh yeah, here it is. Whoops, I have to do it the other way. Sorry, hold on one second. But anyway, so it's interesting that you guys want to be you want to be long Aussie dollars. Now, Australia's going to have a big week this week, Ryan. So how would you navigate through that on a risk rally? You know what I mean?
Yeah, I mean, you got to, as I said earlier, it depends on what reason the risk is bouncing. If it's bouncing on the back of data, then you trade it just on the data numbers. If there's bigger themes at play, but there is the Aussie election coming up Saturday, so
that's going to be a big one this weekend, right?
Yeah, it could be fairly big if it's a.
Could the catalyst be a reopening in China, Ryan?
Yeah,
they're starting to talk about that.
Well, that's a big deal. A lot of overnight news regarding what's happening in Shanghai, right?
Yeah,
exactly.
They're going to open some factories. On
the flip side, Beijing's gone to 3 rounds of mass testing today, and they're moving more to work from home. So it's out the frying pan and into a fire sort of thing.
Well, what else is happening in Australia is on Thursday morning in Australia, they have employment data. They have wage data. I think it's Wednesday morning. So there's a lot of things surrounding the Aussie this week.
We've just had Empire Manufacturing out at minus 11.6 versus plus 17 expected. That's a big knock.
Wow. Okay. So here's the data and by the way, this is included with you guys for the with ForexAnalytix. So that data did just come out, and I know, Dale, you have an interview. Sorry, I feel like I'm behind the curve today because we spent like the first 10, 12 minutes trying to get Dale back on the show. So it's like I forgot that there was data coming out. Well, just behind the curve anyway. But interesting.
Oh yeah, you got the Aussie off your line last week.
Yeah, well, here's what I'll just share this with you guys really quick. Yeah. The breakdown point is right here, and it's at 69.65, and today's high is 69.60. So, I mean, that just kind of tells you how important it is, and because we're already 40 pips off of the high. So, it just you guys should know that that's kind of like the level that everybody's watching. And I am buying the Aussie. I'm with you, Ryan. I'm a buyer of Aussies. I was buying it last week. I'm trying to figure out where I want to buy it again this week. I think it is a trade that, it's gonna fly through 70, and I want to have a good chunk of it as it resurfaces back above 70 at some point. So I'm just trying to figure out when the best place to get in. But one of the things that we talk about, like in the ForexAnalytix community, is our trades. We have the trades room, and we talk about where we're buying and selling, different currencies. And it's not just me in there. It's everybody in there talking about their trades. That's just in the trades room. So we'll see you guys in the ForexAnalytix community. Dale, I'll let you take over so you can have a nice interview with Carley. And I want to say, everybody, if you guys haven't checked out the Trader Funding Program, make sure you check that out. And Ryan and Kman, thank you guys so much for helping us navigate through this morning. It was a little challenging.
No worries, guys. Cheers.
On a Monday morning. So thank you very much.
Okay, nice job, team. Next man up. Hopefully, I'll be able to say good morning to everyone tomorrow. Carley, Garner, welcome back to F.A.C.E. Great to have you.
Thank you, Dale. It's good to be here.
Yeah, the time flies, doesn't it? From
it
the last
sure
time
does.
we talked. And are you going to be able to share your screen and show us what's on your radar? So,
yeah,
I always look forward to speaking with you, Carley, because you come up with some nice ideas and you structure them for option trades so that your risk is limited based upon what you spend or take in on a spread on options. So are you able to share?
Yeah, I'm trying to hopefully that doesn't show you my whole screen. That might have
that's showing
that's
a
showing
spreadsheet.
Yep, you don't want to see that. Okay. Let's try this. All right. Okay, that should do it. Okay, perfect. Can you see just the quote screen?
Yeah, got it.
Okay. All right. Well, I mean, it's been kind of an interesting year, right? Pretty humbling for me. I don't know. Hopefully you've had better luck.
It's been a tough market, tough to be a position trader in a lot of different markets.
Absolutely.
You think you're really on, you catch an important turn, and then last week or the week before when the Fed
Mm.
met. We had that huge 100 handle rally in the S&Ps and gave it up the
Yeah.
next day. I
Yeah,
haven't
it's
seen that in
been
a while. So
no, it's been a long time since we've seen that kind of volatility. And as someone you mentioned, we like to focus on options, and honestly, the option market has just been unruly. There's
yeah,
liquidity drying up and the volatility blowing out, and the volatility refuses to decline in some markets. So option spreads aren't working the way they should on a in a textbook basis. So it's been interesting, but lots of things learned this year.
okay.
Is there anywhere in particular you want to start, or
Well, we're looking at gold.
we are?
I have an interest. I felt that what silver did last week by taking out the stops under 2143
Mhm.
it took out most of the longs. That's where their stops most likely were. And the
Right.
gold silver ratio seemed to have made a little bit of a turn. But what are you thinking here in gold? This important support here?
Sure, absolutely. Let's actually, since you mentioned silver, let me go to that first. All right. So honestly, just to be perfectly frank, I mean, both of these markets kind of took me by surprise. I was bullish coming into the early in the year, so it worked well at first, and then when it stopped working,
I
it stopped
remember.
working. Yeah. So it got pretty messy, but I think that if you look at a monthly chart, this is a monthly chart of silver, and basically the idea is we have our value zone pegged at 21 to 19. So I think you're right. And something to also note about silver is in the last couple of weeks, I don't think I've ever seen a commodity market behave the way silver did recently. I think we had, off the top of my head, I think it was 16 down days in a row. I don't recall any financial market with any type of liquidity having 16 down days in a row. And then if you out of 19 sessions, 17 of them were down. So that's just really an unusual chart pattern.
Where do you think the selling's coming from? Who's liquidating, or is it just a lot of paper selling by a lot of the people JP Morgan's a big player in silver where they stack they have one of the largest stacks of physical and they hypothecate it in the paper market,
Right.
or could it be I don't think it was retail that drove it down. You would think retail's usually a buyer of silver.
Sure. It's hard to say what exactly was going on there. There was a lot of weird things.
Yields.
I suspect. Yep. The bond market's really thrown everything off. I suspect a lot of it too is forced liquidation. Some maybe a fund blowing up, or maybe. I can see it as on the brokerage end of things, and just discussions I've had with others, and what I see is margin calls were literally just rolling in every day. So I think a lot of it was, people selling because they had to, not because they wanted to. And you also have to keep in mind, like with the metals, they're really tricky because most people assume if the stock market's in turmoil, then people want to put their money in metals as some sort of a safe haven. It really doesn't work that way. In fact, when stocks initially start to sell off, usually what happens is people just hit the sell button on everything to liquidate. Maybe they just want to get into cash and see what happens, or maybe they want to sell their gold and silver to help cover margin calls elsewhere. So there's all kinds of things going on. But usually you get in gold and silver, if you look at in 2000, this is 2020, you can see the market initially sold off sharply along with the stock market and then came back. And I'm wondering if that's kind of what we're seeing now. So I can't rule out a plunge to the mid 19s or so in silver. Something we're looking at that might be hard to see on this chart, but there's a little gap here from 20 to 19 and a half, roughly. I'm kind of rounding right here that was left in 2020. We may go for that. I hope not. I'd prefer not to see that, but it is possible. But in the overall scheme of things, I'd say $20 silver and gold were around 1,800. I think those are probably cheap given the environment that we're in of high inflation, economic uncertainty, all these types of things. So I was a little surprised to see gold and silver sell off like they did, but I don't think it had anything to do with traditional fundamentals. I think it was just liquidation because people needed to sell to raise money, and that was that.
That's a great point that you bring up, Carley. Someone has, I forgot who coined the term, it may have been Prechter, all one market. meaning, you know, when the dollar's strong, normally everything goes down. Or
Right.
you know, you could say it's yields, but anyway, the whole
Sure.
market, different asset classes are not differentiating themselves from each other only in magnitude of price rise and falls, but it seems
Mhm.
like the whole market is all one market.
Yeah.
Everything's either risk on or
Mhm.
everything's risk off and falling.
Yeah.
And have you seen many markets that have stood out as far as being able to fight what most markets are doing, whether it's currencies, commodities, uh, bonds, and stocks? They all seem to be headed in the same general direction most
Sure.
of the time, don't you think?
Yeah. Yeah. Lately, yes, that's been
Was
the
it? It
case.
wasn't always like that. I can't remember
No.
when I was younger. Maybe you could help me. Uh,
Um,
didn't they? You know, because people came up with that idea of buying gold during
mhm.
uncertain times. It must have worked at some time.
Right.
It must have been in the 70s. I can remember back to the 70s where people were betting the price of gold and the Dow would cross each other,
Mhm.
and they ended up doing it. Gold was a lot lower
Yeah.
back then. So it seems like you either have to be long the board or short the board, and try and find the relative strength when you're
Mhm.
buying the board and find the relative weakness when you're shorting the board.
Yeah, I think in those types of correlations become more and more obvious when during these types of situations where everything is people are panicking and it's emotion rather than fundamentals. So yeah, I
Yeah.
agree with you. The one area in the commodity markets that I found maybe aren't quite as subject to
Oh, the
all the
grains.
chaos. The grains and the softs and this
Okay.
so those markets haven't, but honestly, I think that a lot of this selling pressure and volatility will bleed into the grains probably
Yeah.
sooner rather than later. I know there's all these fun stories about how corn should be at $10, but if we'll look at a corn chart in a minute, and I'll show you that corn literally has never held a rally. So we'll see. Maybe this will be the time, but I doubt it.
Okay. Interesting.
All
Because
right.
I do remember the Volcker regime, and
Yeah.
he was able to take down everything, except it took almost, it was near the end of the tightening cycle when everyone was watching corn, and corn
Hmm.
just wouldn't break. It just wouldn't break. And
Right.
finally, when it broke is when we were near the end of his cycle. So
Okay.
they're going to be the last to go.
That's interesting. Well, I appreciate you bringing that up. That was a little before my time, so I didn't
Oh,
have that
okay.
perspective. But
Oh, yeah. And I
that
was
makes
only
sense.
10.
Right.
Yeah, or maybe bar mitzvah age. Anyway, so
Gotcha.
I do remember it though, and
Okay.
everyone's staring at the corn chart and going, "God, the corn needs a break so
Yeah.
the Fed could let off," and
Right.
it was stubborn.
Yeah. Okay. And it's
Little
ironic
history lesson from the old
that
man.
no, that's a good one. That's a good
Yeah,
one. It's been kind of. I don't think coming into the year anyone would have guessed that the two best places to have your money were the U.S. dollar and corn, or maybe a few
yeah,
people did, but that definitely wasn't the consensus. But that's been the case.
yeah.
So
So do
it's
you see a continue? I know you want to show corn. Any
sure.
signs of where you might be interested in selling the dollar?
Uh, the
Or
U.S. dollar. Okay.
yeah,
Um, so honestly, I have been wrong in currencies this year. This just is I've had a couple bad calls here, so take it for what it's worth. But I do believe that like this is a weekly chart of the dollar. It's very rare for parabolic moves in any market to hold, and especially in currencies. And to me, like this last little, we stabilized last week, but the week 2 weeks prior to that was as
yeah,
close to parabolic as you could get in something like a dollar index that's relatively diversified. So we did poke above trendline resistance here, you can see, but I
yeah,
really have serious doubts that that's going to hold. I think that we're probably, the market's priced in just about everything you could dream up regarding inflation and the Fed rate hikes and all these things. And I feel like that story's usually when these narratives are the loudest and the most widespread and the most accepted is when the market looks for another narrative. And I think that's kind of where we are. So
yeah.
um,
It
I
looks like
tend to
the
be
10-year
bearish.
may have
Yeah.
peaked.
I think so too. And again, my wildest dreams didn't imagine the 10-year note and bonds getting shellacked the way that they did.
Yeah.
So that's been an interesting move. I do believe that we probably are turning the corner. I think the markets are a lot different now than they were, let's say, 5-10 years ago. There's just different dynamic. They're more electronic. More people have access on their phones, and these things do make a difference. I know it's hard to imagine retail traders can push things around, but if you have millions of retail traders doing all the exact same thing because they saw a heat map on their iPhone, it happens. And I think between that and a lot of like mutual fund and ETF liquidation, I think is really just taken its toll on treasuries and put them through the ringer. But I think the market's really overdone that. And I think from here, I think we probably start heading the other way. So,
okay. So, and you said 104 is reverse the dollar index. You see the circles on Carley's chart, and then you circled the RSI.
Yeah, that's a doozy right there.
I mean, it's definitely confirming the price action. What's the one on the bottom?
That's Williams percent R, which it's pretty rare to see it that embedded like that. So that's obviously a very extended trend. RSI here on that big spike last week was 84, and this is a weekly chart. You really don't see RSI in the 80s that often, and they can hold for in the short run, but in the long run, they never hold. So it's just a matter of time. Now, the thing is, even if we're right and the dollar turns around here in the next, let's say, couple of weeks, that doesn't mean it can't, go ballistic here and print 108 first. So I'm not saying it's going to be clean or easy. There's no free lunches, but I'd say the best trades in the currency market are probably bearish dollar. But I mean, I thought that few months ago, and literally the opposite happened. So we'll see how it goes.
Red line is what, about 103.5, and the black line where they intersect, because that would be like a false breakdown if we got back under 3.5 or
correct.
320.
I'd say if on a weekly chart we can settle below 104 this week, I'd say that's pretty telling, and I'd be a little more comfortable about things reversing. So we'll see how that goes, and it's going to be interesting because usually when the dollar moves higher, commodities generally move lower, and we've literally seen the exact opposite. So it's going to be interesting to see how things go. But my guess is if the dollar does turn around, it probably pulls a lot of commodities down with it because, for example, crude oil and some of the other commodities have rallied with the dollar on the idea of, inflation and inflation hedges and things like that. So,
okay, so you think a softer dollar is going to be bearish silver and gold, or supportive?
No, those are the two. Gold and silver, I think, benefit from a softer
monetary
dollar.
hedges were,
and
that we didn't have in the last run in gold. And that's why, I watched that last run in gold because I was so positive the dollar. So I'm thinking if we are near a dollar turn, now that they've gotten on the metals, that could be the catalyst. So, what's this? Oh, this is still gold.
So this is gold again. Yeah. So we can take a look at crude let's look at crude. Unless you have another idea.
No, that's fine. I'd like to see that.
Okay. This is a daily chart. I'm going to zoom out a little bit here. Okay. So these are previous notes, but the original idea is if you go back over the last several years in oil, you'll see most tops have like 4 waves. This one had 4 waves. I thought this wave was going to run out of steam in the 90s, and obviously the war just completely threw that out the window. This could still be, maybe this is still the 4th wave, but in oil, like in the short run, the path of least resistance is probably higher. Obviously the trend is higher, things are firm. But at some point, I think that, the war is probably not going to last forever. And I believe there's a $8 to $10 war premium in oil. We're obviously starting to get some more oil online. It's a really long process, but the rig count here in the U.S. is slowly inching up. And I know U.S. shale producers have been just extremely hesitant to throw money into production. So there's definitely a big delay, but Whether, until now, we've been focusing all on supply because supply is such a big story. But at some point, we're going to start focusing on demand. And if that occurs, I think crude oil probably breaks down. This is kind of the trading channel we were in, obviously, before the war. We're up above that channel. That's probably the war premium. That's my opinion. I mean, other people think we're going to 180, so we'll see.
Yeah.
But I wouldn't be shocked to see us come up and test like this Bollinger Band. So 115 to 120 is not out of the question. I doubt that happens, but it could happen. So if you're going to, this is a really tough market, by the way. Most people
really
probably
is.
should just stay away. And especially this year has just been a mess. But if you do insist on trading it, maybe consider the micro futures. They're tiny. So you don't have, you're probably not going to ruin your life. Even if you sold here and it went up to 120 on a micro futures, you're only out, what is that, $10? So $1,000. So it's manageable on a micro. But anyway, with that said, my belief is at some point we're going to break back down into this range that we were in. So that could mean high 80s for oil. And I know this is going to sound crazy, but I would not be shocked to see $60 oil again. Yeah. And that would be right here. Like had the war not occurred, we probably would have saw that. But things change quickly. And so here we are. But you want to be, either way, there's going to be plenty of volatility.
I'd look for a news event. Say, for example, I know they've already, Russia has already cut off oil supplies to Poland and now Finland. And an announcement like Europe saying they're now banning Russian oil might be the catalyst for that one last hurrah to the upside. And maybe that's it. So
that would make sense.
I don't know what else could be bullish news for it right now.
Right.
So,
I know everything.
That could be as bullish as it gets, for Europe to bite the bullet. So let's take a look at corn.
Okay.
Dr. Scholl's favorite chart.
All right.
Dr. Scholl's?
You're talking about the shoe insert?
Yeah, they made millions.
Okay, I got it.
Trading corn. The corn's
really,
on
I didn't.
your,
I
corn's
didn't know
on your
that.
feet.
Oh yeah. Oh, I gotcha. All right. Okay,
All
it's Monday morning. All right.
All right.
Okay, so I'll delete these. This is a recommendation we put out to our clients last week ahead of the USDA report, thinking that maybe like corn was sitting right here on support. Let me zoom this out a little bit. This is not a current recommendation. I'll take that out. That was just to play the report. And actually didn't work out horribly, even though corn didn't go anywhere. So the idea is corn's been in this range. We broke out of the range in early April. Now we're kind of trading on the above the trading range. So as long as it holds this support level, which is, this is the July contract, by the way, about 770. The bulls have an edge, in my opinion. I think we have a chance at, this is the time of year that corn, there's a lot of things that go wrong, right? Weather, all kinds of stuff. There was some news that pushed wheat up overnight. And so that corn got a little bit of a boost out of that. So I wouldn't be shocked to see corn kind of run up here and test 840, 850 on the front month. But as I was mentioning earlier, you want to be really careful being complacently long corn because it has a history of just literally falling out of bed. This is a chart we shared on Mad Money with Jim Cramer earlier this year. And at the time we were looking for corn to see 770 to 850. We haven't quite reached 850.
He quotes your work quite a bit when you're not on the show too.
Does he? That's awesome.
I've heard him say, Carley Garner's charts and
oh, cool.
Kudos to you.
Well, thank you. Yeah, he's really nice to us. So the idea was we thought 770 to 850 was in play, and so far that's worked. 1050 is not something I expect, but it is a possibility if something goes haywire. So just keep that in mind. That would be like kind of this uptrend from 2008, 2011, 2012. But you can see corn has generally, the problem is US farmers are really good at what they do, and they become increasingly more efficient as time goes on, which is why we had literally a decade of $3 to $4 corn. So you want to be careful. I know there's a lot of fresh money. I've seen this, like there are corn ETFs, believe it or not.
Yeah.
A lot of fresh money. People, they watch business news or they read the paper and they see there's inflation and, they're told put your money in commodities to hedge inflation. And so there's all this blind money that comes into the ETFs and the corn market a lot of people that do that probably have no idea that this isn't even the corn they're eating for dinner. This is like feed. They probably don't even know that kind of stuff. They're just, they want to hedge inflation. They're throwing money in it.
Yeah. And they're also seeing news stories on wheat farmers that their soil looks like the Dust Bowl. It's red and dry. It looks like the desert.
Yep.
So, and everyone's aware of drought conditions everywhere. Correct. So it's a drought play.
Exactly. And so it gets between those two stories, it gets a lot of money that doesn't understand that commodities don't generally go up forever like stocks do. They trade sideways and there's boom and bust cycles. Most people don't understand that. I shouldn't say most people. Some people that are putting money in for those headline reasons don't understand that. But they should keep in mind that let's say it's my understanding that there's quite a bit of corn sitting in Ukraine that just can't make it to market because of logistics. So let's say that miraculously
it'll make it to Russia like the wheat did. They load up trucks and bring it over. Yeah.
Right. So at some point, these types of things are going to thaw out. The U.S. producers are probably, I know they've had a late start to planting, but they're good at what they do. And so at some point, sooner rather than later, the bullish story is going to probably start to thaw out. And when that happens, we could see $5 corn again. That's just how this works. Yeah.
Okay. Now, I got a question from Anthony Kanakis, and he wants to know, maybe the best way is for him to contact you, but you do execute a lot of different options strategies. You do calendars or do you keep it pretty simple and basic?
We do a little bit of everything. It just depends on what we think might be the best opportunity in a particular market, where the volatility is or isn't. So a lot of times we're doing we are mostly doing spreads, but sometimes occasionally we'll just buy outright options if we think that's the way to do it. So if you go to decarleytrading.com, you can
why
sign
don't you
up
show
for a
your
free trial.
website? Yeah, show your website if you have a chance.
Right.
So anyone who has questions about how to trade these different markets with options and defining your risk, you could go check out Carley. There's her website address right there. www.decarleytrading.com. And I believe you have you're a branch, or you have your own IB.
Yeah, so we're a branch of Zaner Financial Services. So we run our branch out of Vegas because not into the Chicago weather. So here we are. But so if you go to this website, you can sign up if you go to free offers, you can sign up for a free trial of our newsletters. You'll get an idea of some of the recommendations we put out, some good, some bad. Obviously, we're not perfect, but we try to keep people out of trouble and put the odds in their favor and see what happens. We offer everything. We're a brokerage service, so we offer everything from discount online trading to full service commodity brokerage, which is kind of rare. No, there's not too many full service brokers out there anymore.
Yeah, I spent many years doing that.
All right.
So So, and there aren't many people out there like Carley that are still doing it the old-fashioned way, but with all the modern conveniences of internet trading, etc.
Correct.
So, give Carley a shout. And you know what? You say you haven't been perfect, but you know what you have been. I think it's better than perfection. You've been authentic and transparent. You always admit when you're wrong. I don't see you, bragging, taking a lot of victory laps. So you're even when you're right. So
thank you.
I appreciate that.
Sure.
So
thanks.
Sorry, can Carley re-mention the broker? It's the broker that you're an IB for. It's
Zaner Financial Services. Zaner. They are the IB and we're a branch of them. So we're the same entity. We clear most of our business through Gain Futures, which is owned by StoneX. So FC Stone or StoneX. Yeah.
Okay.
All
Well,
right.
I'm always rooting for you, Carly.
Well, thank
Yeah,
you.
hope you have a great spring trading season into the summer, and I'll get a hold of you on Twitter, and we'll keep this thing going. Our conversations every several months or so.
Sounds good. I appreciate it. Thanks for having me.
All right, Carly Garner, everybody. And if you want to trade options, you can tell she has the demeanor and the patience to work with you. I don't. So everyone have a great week. Good luck today. You could join the team in 16 minutes on the morning edge, and don't just count your pips, count your blessings. Adios, everyone. Thank you, Carly.